Good morning, everyone. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. As always, I am joined by my partner, CFA, all things Fed, rates, liquidity, Gregory. Hi, Greg. How are you?
Good morning, Michael.
All right. We got our favorite guest with us today, Greg. I think it's third or fourth time now for Priya. So, Priya, thank you for coming back and joining us. It's important times, and to have someone as knowledgeable as you on this topic is really appreciated by the whole AmeriVet team.
Thanks so much for having me. Lots to talk about.
Yeah, for sure. So here's what I think we'll do. Like I always say, part of being smart is to let smarter people speak. So maybe I'll just kick off a topic, and I'll leave it to you two to jump in on. I'm gonna let you guys dialogue, and maybe I'll jump in at the end. So let's just talk about the Fed's, reaction function right now. Is it the reaction to inflation, or is it a reaction to employment?
Great question. I mean, the Fed does have the dual mandate, so technically, it is there. The reaction function has both. I do think the two components of that reaction function are pulling in different directions. And when Chair Powell's been asked, he's been actually very consistent that he'd look at where the data is relative to that mandate consistent level, how long will it take to get there, and then weight it accordingly. Now, as of right now, it looks like the inflation number is above the 2% inflation target. So that's almost the more immediate issue. The hard data has been actually very resilient. We just had the payroll report last week. The labor market looks okay. And technically, that is, I mean, GDP is not there, part of the mandate, it's full employment. So you could argue, looking at the hard data, that the full employment component is not at risk. And so there should be no debate. They should keep rates here. They might even talk about hiking. But we know that we're dealing with, I think, a couple of shocks. We're dealing with clearly the tariff shock. We don't know the end point. We keep hearing about deals. How long will it take? What's the end point for China as well as the rest of the world? So that's one shock. And then we're dealing with the uncertainty shock, which is very non-linear. At some point, companies and consumers find it hard to plan, and they actually take actions, which is then very growth negative. So this is the dilemma the Fed has. And I think they're just going to buy time. We all are living in this fog of uncertainty. I think the Fed doesn't want to probably take a decision or even guide the market. There are times when they use forward guidance to, lean the market one way or the other. I don't even think they're there yet because they have this inflation above target. They have uncertainty, and they don't know if growth is going to get impacted to the point where the employment side of the mandate becomes a problem for them. So I think this is a wait and watch meeting, and all they can try and do is clarify that the reaction function exists and they'll watch both sides of it. So just try and give us some comforting sense, but this is really all about policy coming out of Washington.
So, Greg, I think that thought process of, the sort of wait and hold sort of play out in this Fed meeting seems to be sort of preeminent right now. You're seeing it that way also?
Yeah, I definitely am. I mean, it's if you to Priya's point, I mean, if you look at where policy seems to be coalescing in terms of potential tax bills and more clarity on tariffs, like Priya said, no deals have really been done here. There's talk of deals. It seems like we coalesce maybe in and around that early July period. So even I think Friday with the strong employment number, obviously no rate move this week, but even froth came off the June meeting as well. So, maybe the earliest they're going to have some clarity here is maybe around that late July meeting.
Yeah. So let's talk about sort of Fed independence for a second, if you don't mind. The administration was pretty critical 3 weeks ago. Looks like they've backed off a little bit here. I'm personally believe in Fed independence is extremely important, but we also know we have an administration that is not afraid to press onto people. I'd love to get both of your thoughts on that.
So I can start. I think it's absolutely essential for a bunch of things, including the dollar being the reserve currency. The entire, I would say, the financial system rests on the fact that you have rule of law, checks and balances, and an independent central bank. And so I think it's extremely important. I will say criticism against the Fed chair is not that new. I mean, President Trump brought this up in his first term. And so I think criticism the market can handle. Where the market did get very nervous a couple of weeks ago was the tweet or the comment on X talking about termination. And we know Chair Powell's term is up the middle of just about a year from now. And so later this year, I think we were going to talk about who, or it would be out there, who the administration was thinking about. And then looking for credible next Fed chairs, I think was going to be the focus. But would he get fired? If you fire one, do you fire more? Is the president setting monetary policy? I think those questions came up and you saw the market reaction. I mean, there was a general deleveraging, I think, in the bond market that was underplay. And it really got much worse when you start thinking about, what's going to happen with Fed independence. If that's challenged, how is our deficit going to get? And the US has a very large deficit, large amount of debt outstanding, plus continued deficit. So our ability to find buyers for our debt would be challenged. I think that has been put to the side. The president was very clear that he never thought about firing Chair Powell. So maybe it was just an unfortunate term that he used, and the market that was already jittery sort of bounced on it. So I think as long as we're not talking about firing Chair Powell or any other Fed members, I think the president's entitled to his opinion. And I do think the Fed dots actually do show the rate cuts. The Fed has been pretty vocal across the board that monetary policy is restrictive. So when Secretary Besson said that the 2-year is expecting that the Fed is likely to cut rates, that is the case, that the market collectively believes that rates will be lowered. I just think the Fed needs that more evidence for them to ignore the fact that inflation's above target, and they get more worried about the employment side to start to cut. But I think the writing's sort of on the wall that the Fed's likely to cut rates. We're debating endpoint, timing. And I think some of the attacks on Chair Powell might go down as the Fed does start to cut rates. We do expect that rate cuts will happen. But I just hope that we don't hear more in terms of firing Chair Powell, because then it's a very slippery slope. You fire one, you can fire more. Then we start talking about how are decisions taken at the Fed. We know it's a democracy at the FOMC. So then you go down a really slippery slope. I think the market's less worried about that, given what the president said, that he actually never considered firing Chair Powell. So I think this is criticism, and the market can take it as criticism rather than an actual policy change by firing him.
I would assume that's a pretty agreed upon statement there from Priya, correct?
It is. I mean, we posted on LinkedIn right from the get-go with this, like, just let it alone, stay away from it, right? It's not a good pathway to go down. I think the odds were, we knew the president was going to go down this route again, and he has been more vocal, perhaps than some other presidents. But I think, look, in general, every president wants rates lower, right? The tricky part now is we have inflationary dynamics that are different, and we've written about this too. Trump 1.0, we were fighting inflation shortfalls, and now in Trump 2.0, we're more concerned about the supply side, especially with tariffs and where inflation is at. So in my mind, even if he did replace Chair Powell at this point, no matter who comes into that seat, the reality is they're probably going to see it the same way that we're talking about it now. And I firmly believe that. It doesn't mean that he's going to stop saying what he said over the weekend, which is, look, I'm going to be nice to the Fed chair, but he still wants rates lower. And I think that theme is going to continue.
What's interesting is, I think it's some of the criticism, at least early on, maybe not more recently, on Powell is probably fair, right? He was a little late to raising, right? So it's not a perfect record. I'd like to end with this, and maybe Greg, we'll start it with you and then give Priya the last word here. I am starting to believe that the one voice that has President Trump's ear is Secretary Bissett. And I go back to sort of, I don't want to call it a mini crash. As much as I love the equity market, I am well aware that, the credit markets are much more important. And I'm under the belief that as the equity market was starting to fall apart, that Secretary Bissett had a couple words with Mr. Trump and said, I think we need to get word here about the credit markets. I'd love to hear both of your opinions on sort of Secretary Bessent. You know, he's a much different calming presence than some of the other folks out there. So if you could just opine on that, I'd appreciate it. And Greg, maybe we'll start with you.
Sure, I'll be quick because I want to pass it off to Priya. Look, I mean, Secretary Bessent is a macro mindset, right? If you're going to change, you think about Treasury secretaries in the past, they're all different, right? Secretary Mnuchin, he seemed to be the right guy for with the pandemic. And Secretary Bessent seems to be the right guy right now as you're moving global trade and global pieces around and global capital. You know, he understands interest rates. He understands foreign exchange. He's run macro risk, and he does have a good temperament, I think, politically to try and get some of this stuff done. So I would agree with you. He's definitely taken on a larger voice for sure.
Priya?
Yeah, I would agree. I think as a macro, he follows the macroeconomic forces. I think that's very positive because here's what I've struggled. I think we all have struggled with tariffs is what's the end game? Is it to take the trade deficits down to zero? Is it to have more fair trade? Is it to raise revenues? Some of these goals compete with each other. And so, when you've had sometimes I wonder, is the administration negotiating with itself? In terms of which goal is important on which day. And you can just imagine when they're across the table from our trading partners trying to negotiate, all these goals can potentially be in conflict. So this is why I think Secretary Bessent, if he's in charge, and it feels like he is more in charge, he might have the focus of, okay, we've got all these goals, but we've got a global trading system and a global financial system that are very linked. I mean, the flip side of a trade deficit is a capital account surplus, which means that the rest of the world owns US assets. And a lot is made about foreign holders of US treasuries. Foreigners own a large part of the credit market as well as the equity market. I think the largest share is in the treasury market, but they own a lot of corporates, mortgages, as well as equities. And so just trying to balance that, because if the aim is to get zero trade deficits, then the rest of the world doesn't have to own any dollars. And then the cost of capital for the US is going to go up a lot. I think Secretary Bessent is the best place to understand that. And so trying to get a trade deal which actually allows, and he said this a few times, he said, we're not backing away from the strong dollar policy because, there's a lot talked about US exceptionalism, etc. And maybe this is just rebalancing. Maybe the rest of the world owns too much of dollars and this was necessary and healthy. But is it an en masse exodus from the US dollar? I think that Secretary Bessent might understand would be very destabilizing, not just for the rest of the world, but for the US, for the US financial system. We need the rest of the world to buy a lot of our assets to keep our cost of capital lower. So I'm heartened by the fact that he has a seat at the table, hopefully the louder voice within everyone at the administration, and can sort of try and craft together a deal that doesn't destabilize the financial aspect. There's trade, but there's also the financial system, and the dollar is a big part of that. He's pushed back against the Mar-a-Lago Accord, which is great. There are people in the administration who've talked about user fees for treasuries, and you've not seen Secretary Bessent bring that up. So I think maybe the adult in the room who says, we need to get something out of the trade deal, keeping the financial system in mind, I think that would be positive. So that's what's giving me hope. Maybe that's why the equity market seems to have rebounded so much. We don't have a trade deal, and yet if you missed the month of April, actually it'd be much better for it because you wouldn't have had to stress through the
You'll be at
ups
the
and
same spot
downs as
anyway.
much. Right. Except the dollar. The dollar's moved a lot. And so I think he's probably the best placed in the administration who understands the importance of FX. So I'm heartened. I hope he can help be at the table crafting all of the trade deals.
Yeah, I think he's going to be heavily involved in all the big ones for sure. Well, I'm very guilty of saying this probably every time for the last 3 years, but I feel like this Fed meeting is extremely important. And I'm hopeful that they just kind of take a hold pattern here and let some of the economic numbers work itself out, maybe some trade deals work itself out, and then take a fresh look and we go from there. But Priya, thank you so much. We are so grateful to have you. I hope you know that. And Greg, you know how much I love doing this with you. So, I don't even know how many years. It's almost 6, I think. So, good stuff. Greg, we look forward to you diving into the minutes. That's, you're going to do what you do, and our clients and all of us are better off for it. So I wish everyone a great week ahead. And thank you again, Priya and Greg. Have a great week, everyone.
Thank you. Good
Thank you.
luck.
That's great.